Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today's intraday video is for Monday, February 2nd, 2009. Well, today's a fascinating day, guys, and I want to cover a few things because those of you that watched the weekend video and those of you that have been part of the Research Center and which know a little more about what we've been calling for and the key levels, you're going to now see on this chart how the key levels came into pure play today based off of the market movement we've seen today so far. You're looking at the intraday 10-minute level right now on the SPY, and this is exactly what we've been talking about, folks, in understanding this in a gap down situation, especially after multiple days down, which we had Thursday, Friday down. You have to be ready for this type of action. Now, we were at a key level as well on the daily and on the intraday 60-minute. I'm going to show you that 60-minute trend line, which we had closed literally right on or right above. We gapped below it, but the market actually recaptured it and has then continued to run higher. So there's a couple things I want to show you first of all. Number one, let's first talk about the intraday analysis, okay? What I did here was draw on some key trend lines tracing back. Now, these key trend lines are everything you needed to know today. I put them on our blog at InTheMoneyStocks.com. Click on the Rant and Rave blog. We give intraday analysis on that as well as the videos, multiple stuff, articles, and so forth on trading and becoming a better trader on the Rant and Rave blog. So this was up here, and this line here was up there as well as this line. And these are the two ones, the bottom one here that you wanted to pay attention to when I posted them this morning because it really played out beautifully. But just going all the way back, look at how far this one comes back. This one comes from this point down to this point, and just keep on dragging it all the way down, and you can see how it plays right into where we gapped down to. Alright, now what happened was we gapped below that and we kind of started to hammer on it. You hammered on it once, you fell down, you broke back up, hammered on it again. Then the next candle we hammered on it again, fell down. It didn't look that promising. Again in the third candle, 3 straight candles you're hammering on this upside. Now, what have we talked about, guys? And I can't imagine. I think I've done probably 50% of the videos over the past 3 weeks have been with a situation where we've gapped down or gapped up right into resistance or support. And what have I said? Every video I've said, if you can't get above it over the first few candles and you start to break lower and you take out the low and close below the low of the candle, you're going to see more downside. If you don't do that and you finally get above that line, you're going to see a good move up in this market. Alright, and exactly the number 2 situation happened here where you never really broke down and ultimately you got above it and then you started to see more upside. Now, where does this market go exactly to? That's right. You have to have your trend lines drawn in. Let's go back and find out where the trend lines were in here. All right, we got to go all the way back. I mean, it's very far back. Right to here, guys. This is exactly where you want to follow. This line right here, going all the way back to the 23rd. I believe this is not the 26th, my fault. So you have 2 lines here. One is the low here on the chart from the 25th. Let me just, again, scan that back. Check that. That's the 23rd. So here's the 23rd. And then your secondary line is the 26th, the low from the 26th. All right, this low right here. Taking those 2 lines into account and going all the way to present, what do you get? You get your key resistance level number 1, R1, which again I posted on the blog today. You guys can see the charts. That line draw perfectly in there. All right, and then secondary number 2, R2. All right, R2 is also coinciding here with the 50 moving average. So you know R2 is going to be a lot of resistance right here, guys. Right here, a lot of resistance. Okay? In addition, you knew R1 was going to be good resistance. First hit of that trend line was going to be a pullback. You got that pullback on this 10-minute chart to a beautiful percentage. Now, you could have also done this, guys, which is a couple odds and ends. You can also know that you can do your retrace. How much of a retrace was this pullback? About 50%. That can be also a level to understand a possibility of a long scenario there. And again, look at that move. So you have gapping lower right underneath resistance now because we went below this line. This line would have been support if we were above it, but we were below. Now you again fight above it. That's the key. You get above it. That reestablishes this as support. That's a bullish signal. You go all the way to R1, or which really was R2 at that point. Pull back, then to R3. So again, starting from the opening candle, this was R1, R2, R3. Okay, let's go to the 60-minute because this is where it gets even more interesting, guys. I really want to focus on educating you guys about this kind of stuff, what's going on in this market. This is the key line. I've drawn this line in for God knows how many weeks on the 60-minute chart. This line right here. Okay, there it is. This was a very key line, guys, because you're taking the top of this candle and putting it to the top of this candle and drawing it straight through. Now, when we broke out, and this was how we knew the market broke out early last week and would go to this 200 and how we called for that. Now, the idea here is this, guys, all right? So, you broke out above it, you pulled back right into necktie support, and you never really broke below that trend line. You did close below it, but you didn't confirm it on the next candle. All right, so technically you rallied back above that line, and that's when you made the big move to the 200 moving average. At that point, that's a sell signal. You guys know first hit of any moving average, especially the 200, is going to be a sell signal. And the pullback was drastic. I'll be even surprised. I was even a little surprised at that, but look at where it went to. To extend this trend line, the low of the candle on Friday on the 60-minute exactly touched that trend line. Now, the interesting thing about it is we gapped below it, right? You gapped below it today, but actually recaptured it on the first 60 minutes. So that's telling you technically this line held. You retraced on the second candle of the day, but you never closed below it. You closed right on it. And then the next couple candles here have gone to the upside. All right? So just from a technical level here, this is still an extremely powerful line. I said that on the weekend video I put out over the weekend. I've said that for multiple days, multiple weeks even, if you will. This trend line's a very big deal, and you're seeing why it's such a big deal, and you were able to fight back above it today and get back to the upside. Now, on the 60-minute, there's going to be a couple levels here. This would be R1, and ultimately this would be a major R2 up here. You have a necktie formation, the 20 and the 50 moving average, but R1 would be right around here. If you were able to push up, this would be big resistance right here. Okay? Again, on the 60-minute, if we're going to break, and you guys can see we're still paused because we're right on the 50 and the trend line, and you can see the market's having a lot of trouble getting any higher because of this R2, technically R3 resistance point here. But if we were to get above that, well, then you're starting to talk about, let's draw on another level here. This would be a pretty big level right into here as well. Okay, so we'll watch that one as well. Now let's just talk about oil here. Oil showing a good reversal today, guys. This is the USO. Big move up, pull back, small move, pull back, big move, major resistance right here. Okay, on your intraday 10-minute USO chart. The UNG, though, very great move. Beautiful move here. Look at this UNG. This is the natural gas ETF having a powerful move. Very, very big move up in the markets here. This market continues to push up on natural gas. Very, very impressive move on natural gas today, guys. I've been a fan of natural gas for the last week or so, as those in the premium subscriber service have known. And again, I do encourage you to join that premium service on our website, inthemoneystocks.com, the Premium Research Center. You get the end-of-day videos. You get all the exact daily analysis, which is really more important because the intraday, unless you're a day trader, doesn't come into play that much. It's the daily stuff that you can position yourself and understand, are we going to go up tomorrow, down tomorrow. In addition, all your key levels on gold, oil, and natural gas, and the dollar, as well as lots of other stuff like the Hidden Gems report. I just put out a new Hidden Gems this morning because it is the first of the month. That's a small cap, mid cap play that looks to be underperforming. Last month's Hidden Gems, I put out 2 of them. They went about 50% each within a matter of 2 days. Talk about a big move. In any case, one got bought out at later on as well for an 80% premium. So that's another story. But you also have educational videos. You name it, it's on there. You guys can go to In the Money Stocks and check out the Research Center. Hope you join up. We'd love to have you and continue to give spot-on analysis and guidance without the Wall Street hype. Take care, guys.